5-26, TDS, Chapter 1. State of the Economy, Pushing the Growth Frontier Department. Department of Economic Affairs, Ministry of Finance document date. January 2026 theme. Strategic Resilience and Structural Expansion Executive Summary. The opening chapter of the Economic Survey 2025-26, titled State of the Economy. Pushing the Growth Frontier serves as the macroeconomic manifesto for the fiscal year. It situates India's economic performance against a backdrop of global volatility, characterizing the world economy as fragile and diverging. While the global order grapples with geopolitical fragmentation, supply chain reorientations, and the lagging effects of monetary tightening, India has transitioned from a phase of post-pandemic recovery to a phase of structural expansion. The central thesis of Chapter 1 is that India is no longer merely reacting to external shocks, but is actively pushing the growth frontier through robust domestic demand, prudent fiscal consolidation, and a revitalized financial sector. The chapter estimates real GDP growth for FY25 at 6.568% and projects a similar band for FY26, signaling that India remains the fastest-growing major economy. However, it cautions that sustaining this momentum requires strategic resilience, the ability to convert global volatility into domestic opportunity through intelligent indigenization and state capacity building. Section 1. The Global Economic Context. Fragile and diverging. The survey opens with a sober assessment of the external environment. Unlike the synchronized growth seen in the early 2000s, the current global landscape is defined by divergence. 1.1. The Great Divergence. The survey notes a sharp disconnect between major economic blocs. The United States has shown surprising resilience, avoiding the hard landing predicted in 2023-24, though growth is moderating as excess savings dry up. The Eurozone remains trapped in stagnation, struggling with high energy costs and the deindustrialization risks posed by geopolitical tensions. China continues to face structural headwinds, primarily from the property sector crisis and demographic contraction, leading to deflationary pressures that are spilling over into global markets. 1.2. The end of hyperglobalization. The chapter argues that the era of hyperglobalization has been replaced by slowbalization or fragmentation. Global trade is no longer growing faster than global GDP. The rise of protectionist industrial policies in advanced economies, such as carbon border taxes and subsidy wars, has altered the rules of the game. For emerging markets like India, this means the traditional export-led growth model faces higher barriers, necessitating a strategy that balances domestic consumption with service-led exports. 1.3. The wrinkle in the ointment. A critical observation in this chapter is the decoupling of macroeconomic success from currency stability. The survey highlights that despite strong fundamentals, emerging market and developing economies, EMDEs, face currency volatility. This is attributed to the higher-for-longer interest rate regime in the West, which keeps the dollar strong and capital flows volatile. The global system, the survey argues, is currently mispricing risk, often penalizing emerging markets despite their superior growth differentials. Section 2. Trends in the domestic economy. Against this global gloom, the Indian economy stands out as a bright spot, demonstrating resilience that is domestic in origin but global in impact. 2.1 GDP growth estimates. FY25 performance. The first advance estimates, FE, place real GDP growth at approximately 6.8%. This growth is notable because it comes on a high base and amidst weak external demand. The shift to potential growth. The survey posits that India's potential growth rate has structurally increased. Reforms undertaken over the last decade, GST, IBC, digitization, have now matured, allowing the economy to grow at higher rates without overheating, inflation remaining within bounds. 2.2 Drivers of aggregate demand. The chapter analyzes the expenditure side of GDP to pinpoint the engines of growth. Private final consumption expenditure, PFCE, private consumption, accounting for nearly 58% of GDP, has shown broad-based recovery. Urban demand remains the primary driver, fueled by rising disposable incomes in the upper deciles and a boom in the gig economy. Black rural recovery. A distinct theme in the 2025-26 survey is the revival of rural demand. A favorable monsoon in 2025, combined with moderating food inflation, has improved the terms of trade for the agricultural sector. Rising tractor sales and FMCG volumes in rural India confirm this trend. Gross Fixed Capital Formation, GFCF. The investment cycle investment has emerged as the distinct growth driver, contributing significantly to GDP growth. Black public sector lead. The government's sustained infrastructure push, CapEx, has created a crowding-in effect. The survey notes that the multiplier effect of public CapEx is now visible in downstream industries, steel, cement. Black private CapEx turnaround. After years of wait and watch, the private corporate cycle has turned. Deleveraged corporate balance sheets and high capacity utilization, crossing the 75% threshold, have triggered fresh investments in machinery and equipment. Section 3. Sectoral analysis, aggregate supply, the supply side gross value added, paints a picture of balanced growth, though with distinct sectoral nuances. 3.1 Agriculture. The reliable safety net agriculture continues to grow at a steady clip, above the long-term trend of 3.5%. The survey highlights the diversification of the farm basket. Non-cereal sectors, horticulture, livestock, and fisheries are now driving agricultural GVA, insulating the sector from pure monsoon dependency. 3.2 Industry. The manufacturing rebound. Black construction. This sector has been the star performer, driven by the housing boom and government infrastructure projects. It has also been the largest absorber of semi-skilled labor. Black manufacturing. The PLI production-linked incentive schemes are beginning to show results in specific sectors like electronics and pharmaceuticals. However, the survey admits that manufacturing exports faced headwinds due to the global slowdown. 3.3 Services. The Global Capability Center, GCC, boom services remain the powerhouse, growing at over 7%. The narrative has shifted from IT services to global capability centers. India is becoming the R&D and back-office capital of the world. High-value services exports are not only funding the oil import bill, but are also creating high-quality formal jobs in Tier 1 and Tier 2 cities. Section 4. Assessment of macroeconomic fundamentals. The chapter dedicates a significant section to macroeconomic stability, arguing that growth without stability is unsustainable. 4.1 Inflation. The success of flexible targeting. Black headline versus core. The survey notes a divergence. While headline inflation faced volatility due to food shocks, vegetable prices, core inflation, excluding food and fuel, has remained sticky but low, hovering around 4%. Black the policy stance. The government's active supply-side management, export bans on specific staples, open market sales, complemented the RBI's monetary policy to keep inflation within the tolerance band, 4% plus 2%. 4.2 The external sector. Resilience in flux. Black current account deficit, CAD. The CAD is estimated to be well within manageable limits, around 1.5% of GDP. This is a result of robust service exports offsetting the merchandise trade deficit. Black remittances. India continues to be the largest recipient of remittances globally, $125 billion plus, reflecting the changing composition of the Indian diaspora towards high-skilled professionals. Black forex reserves. The reserves provide a strategic buffer import cover of over 10 months, insulating the rupee from speculative attacks during periods of global dollar strength. 4.3 Fiscal health. The glide path. The chapter reaffirms the government's commitment to fiscal consolidation. Black quality of expenditure. There has been a tectonic shift in the composition of government spending, from revenue expenditure subsidies to capital expenditure assets. This improves the quality of the fiscal deficit. Black debt sustainability. While the general government debt to GDP ratio remains high, the survey argues it is sustainable because the RG, differential growth rate minus interest rate, is positive. Section 5. The financial sector, a pillar of strength. One of the strongest arguments in Chapter 1 is the turnaround in the financial sector. 5.1 From twin deficit to twin balance sheet advantage. A decade ago, India faced a twin balance sheet problem, over-leveraged corporates and bad loan-laden banks. Today, the survey declares a twin balance sheet advantage. Black corporate balance sheets. Companies have deleveraged and are sitting on cash piles ready to invest. Black bank balance sheets. Gross non-performing assets (GNPAs) are at a decadal low below 3%. The capital to risk-weighted assets ratio (CRAR) is healthy, indicating that banks have ample appetite to lend. 5.2 Credit growth. Non-food credit growth is robust, approx. 15–16%, broad-based across retail, services, and increasingly industry. This credit flow is the fuel for the growth frontier mentioned in the title. Section 6. Outlook and Way Forward. The concluding section of Chapter 1 transitions from analysis to strategy, outlining the roadmap for 2026 and beyond. 6.1. The Growth Projections. Black FY26 Forecast. The survey projects real GDP growth of 6.3% to 6.8%. Black Rationale. This projection assumes a normal monsoon, sustained momentum in services, and a gradual recovery in global trade. 6.2 Key Risks. The survey is not blind to risks. It identifies 3 known unknowns. 1. Geopolitical spillovers. An escalation in West Asian conflicts could disrupt energy corridors, spiking oil prices and inflating India's import bill. 2. Financial contagion. Volatility in global bond markets could trigger capital flight from emerging markets. 3. Climate shocks. Increasing frequency of extreme weather events poses a recurring risk to food inflation and agricultural yields. 6.3 Strategic Priorities. Pushing the frontier to move from 6.5% growth to 7.5% or 8%, the survey outlines a triad of priorities. 1. Intelligent indigenization. As detailed further in Chapter 16, India must integrate into global value chains, GVCs, not by protectionism, but by building competitiveness. The China Plus One strategy is an opportunity that must be seized through efficiency, not just subsidies. 2. The energy transition, balancing energy security with decarbonization. The survey argues for a diversified energy mix, acknowledging that fossil fuels will remain part of the baseload even as renewables expand. 3. AI and human capital. The growth frontier will be defined by technology. The survey calls for a massive upgrade in skilling infrastructure to ensure the demographic dividend is not negated by AI-driven displacement. 6.4 Conclusion. Chapter 1 concludes that the Indian economy has moved past the stage of recovery. It is now in a phase of consolidation and expansion. By maintaining macroeconomic stability and pursuing next-generation reforms, factor markets, logistics, digitization, India is positioned to be the key driver of global growth in the latter half of the 2020s. The future belongs to those who build resilience. India's journey from recovery to rising global prominence is paved with the bricks of structural reform and the mortar of macroeconomic prudence. Chapter 2. Fiscal Developments, Anchoring Stability Through Credible Consolidation. Theme. Fiscal Prudence, CapEx-led Growth, and Cooperative Federalism. Executive Summary. Chapter 2 of the Economic Survey 2025-26, titled Fiscal Developments, Anchoring Stability Through Credible Consolidation, provides a granular analysis of the government of India's balance sheet. In a global environment characterized by high debt and fiscal profligacy, India's fiscal strategy stands out for its discipline and strategic intent. The central narrative of this chapter is the successful execution of the fiscal glide path. Having navigated the pandemic-induced fiscal expansion, the government has decisively pivoted towards consolidation without compromising on growth. This has been achieved not by compressing expenditure, but by improving the quality of expenditure, switching from consumption, revenue expenditure, to asset creation, capital expenditure, and by reaping the dividends of improved tax compliance and formalization. The chapter confirms that the fiscal deficit targets for FY26 are on track, serving as a vital anchor for macroeconomic stability. It argues that fiscal prudence has played a dual role. It has kept inflation expectations anchored and has crowded in private investment by keeping the cost of borrowing manageable. Section 1. Introduction. The strategic pivot. The chapter begins by framing fiscal policy as a tool for long-term stability rather than just short-term demand management. It contrasts the fiscal trajectory of advanced economies, many of which are grappling with debt-to-GDP ratios exceeding 100%, with India's calibrated approach. 1.1. The twin pillars of fiscal strategy. The survey identifies two guiding principles for the fiscal year 2025-26. 1. Credible consolidation, adhering to the announced path of reducing the fiscal deficit to below 4.5% of GDP by FY26. This credibility is crucial for sovereign ratings and investor confidence. 2. Expenditure reprioritization, a decisive shift towards high-multiplier capital expenditure, CapEx, while rationalizing revenue expenditure through better targeting of subsidies. 1.2 Performance overview. The chapter notes that despite external headwinds, volatile oil prices, supply chain shocks, the fiscal arithmetic has remained robust. Revenue receipts have exceeded budget estimates, driven by structural improvements in the tax ecosystem, while expenditure has been front-loaded to support infrastructure projects. Section 2. Central government finances. This section provides a detailed breakdown of the union government's receipts and expenditures, highlighting the structural shifts in the fiscal landscape. 2.1 Revenue receipts. The buoyancy story. The survey highlights a structural upward shift in India's gross tax revenue, GTR. The key theme here is tax buoyancy, which has remained above 1, indicating that tax collections are growing faster than the nominal GDP. Direct taxes. The new engine. For the first time in years, direct tax collections have significantly outpaced indirect taxes, signaling a progressive shift in the tax structure. Black corporate income tax, CIT. Enhanced profitability of the corporate sector, driven by deleveraged balance sheets, has translated into robust CIT inflows. The stability in tax rates, concessional regime, has improved compliance. Black personal income tax, PIT. The survey notes a widening of the tax base. The formalization of the economy and the integration of financial data, AISTIS, have plugged leakages. The rise in PIT is also attributed to the growing middle class and the formalization of jobs in the services sector. Indirect taxes. GST stabilization. Black goods and services tax, GST. The survey describes GST as having reached maturity. Monthly gross GST collections have stabilized at a new normal, significantly higher than previous years. The reduction in the compliance burden and the effectiveness of anti-evasion measures, e-invoicing, are cited as key drivers. Black customs and excise. The chapter notes that excise duties on petroleum products were managed dynamically to shield consumers from global oil price volatility, balancing revenue needs with inflation control. See non-tax revenue. Black dividends. A significant contributor to the revenue side has been dividends from the Reserve Bank of India, RBI, and Central Public Sector Enterprises, CPSEs. The robust balance sheets of public sector banks, PSBs, have resulted in record dividend payouts to the government. Black asset monetization. Proceeds from the National Monetization Pipeline, NMP, primarily in roads, power, and mining, have provided a non-debt creating revenue stream, although the survey notes there is scope to accelerate this further. 2.2 Expenditure. The quality shift. The survey emphasizes the quality of expenditure as the defining feature of fiscal management in 2025-26. Capital expenditure, CapEx, thrust Black the multiplier effect. The government has continued its aggressive CapEx push, budgeting substantial increases for infrastructure. The survey reiterates the RBI's finding that the fiscal multiplier for CapEx, approx. 2.45, is significantly higher than for revenue expenditure, 1. Black key sectors. The bulk of this spending is directed towards railways, modernization and new tracks, road transport, highways and expressways, and defense, modernization and indigenization. Black crowding in. Crucially, the chapter provides evidence that public investment is no longer crowding out private investment. Instead, it is crowding in private capital by removing infrastructure bottlenecks and lowering logistics costs. B. Revenue expenditure and subsidies Black rationalization. While committed expenditures, interest payments, salaries, pensions, remain rigid, the government has achieved efficiency in subsidies. Black targeting. The focus has shifted to saturation of welfare schemes using digital public infrastructure, JAM Trinity. This ensures that fertilizer and food subsidies reach the intended beneficiaries without leakages, effectively doing more with less. Section 3. Overview of state government finances, recognizing that the center is only one half of the fiscal equation. The survey dedicates a substantial section to the finances of state governments. 3.1 Cooperative Fiscal Federalism. The chapter highlights the improved coordination between the center and states. Black CapEx loans. The continuation of the scheme for special assistance to states for capital investment. 50-year interest-free loans is lauded as a game changer. It has incentivized states to prioritize capital projects over populist revenue spending. Black tied versus untied. The survey analyzes the utilization of these funds, noting that states have successfully tied these loans to reforms in areas like power sector distribution, urban planning, and digitization. 3.2 State Fiscal Health Black Deficit Trends. The gross fiscal deficit, GFD, of states is consolidated and largely remains within the limits set by the Finance Commission, typically 3% of GSDP, with additional space for power sector reforms. Black revenue autonomy. States have seen an improvement in their own tax revenues, SGSD and state excise, reducing their dependency on central transfers slightly, though GSD compensation cessation remains a point of discussion. Section 4. General government finances. This section aggregates the data, center plus states, to provide a holistic view of the public sector's footprint. 4.1. The consolidated deficit. The general government deficit has shown a consistent declining trend from the pandemic peaks. The survey argues that this consolidation is essential to free up national savings for the private sector, thereby keeping interest rates conducive for business investment. 4.2. Impact on bond yields. By sticking to the consolidation path, the government has managed to keep the 10-year GSEC yield range-bound, despite global monetary tightening. This stability in the benchmark yield curve is critical for the pricing of corporate bonds and housing loans. Section 5. Debt profile of the government. A critical analysis of debt sustainability is presented to counter global narratives about rising debt levels in emerging markets. 5.1 Debt metrics. Black debt to GDP. The general government debt to GDP ratio, while elevated due to the pandemic legacy, has begun to taper off. The survey attributes this to the denominator effect, robust nominal GDP growth, and fiscal discipline. Black sustainability, RG. The chapter emphasizes the R-G differential. As long as the rate of growth of the economy, G, exceeds the cost of borrowing R, debt remains sustainable. For India, this differential remains positive and favorable. 5.2 Profile of debt. The safety net. The survey argues that the composition of India's debt is a major source of resilience. Black currency risk. An overwhelming majority, over 95% of the government's debt, is denominated in Indian rupees. This insulates the sovereign balance sheet from exchange rate volatility, a sharp contrast to many other emerging economies facing debt. Distress. Black maturity profile. The weighted average maturity of the outstanding stock of debt remains long, typically over 10 years for central loans, reducing rollover risk. Black ownership. The debt is largely held domestically by banks, insurance companies, and the RBI, reducing vulnerability to capital flight by foreign portfolio investors. Section 6. Conclusion and outlook. The chapter concludes by reaffirming the government's commitment to the path of fiscal rectitude. 6.1. The way forward. Black glide path adherence. The survey reiterates the target to bring the fiscal deficit below 4.5% by FY26. Black next-gen reforms. It hints that future fiscal space will be created not just by tax buoyancy, but by asset recycling and further rationalization of non-merit subsidies. Black risk management. The primary risks to the fiscal math identified are global commodity price spikes, fertilizer fuel subsidies, and potential slowdowns in global growth affecting tax revenues. 6.2 Closing thought. The chapter summarizes that India's fiscal policy has successfully transitioned from crisis management to structural strengthening. By using the fiscal budget as an instrument for capital creation rather than consumption, the government is laying the physical and digital foundations for the next decade of growth. In a world of fiscal fragility, India's commitment to consolidation acts as a macroeconomic anchor, stabilizing expectations and securing the resources needed to push the growth frontier. Chapter 3. Monetary Management and Financial Intermediation Theme. Financial Stability, Credit Expansion, and Digital Intermediation Executive Summary, Chapter 3 of the Economic Survey 2025-26, titled Monetary Management and Financial Intermediation, presents a picture of a financial system that has successfully transitioned from a phase of repair to a phase of robust support for economic growth. The central narrative is the crystallization of the twin balance sheet advantage. Unlike the previous decade, characterized by the twin balance sheet problem, over-leveraged corporates and stressed banks, FY25 witnesses a synchronized strengthening of both. Banks are well capitalized with decadal-low non-performing assets, NPAs, and corporates are deleveraged with high capacity to invest. This chapter details how the Reserve Bank of India, RBI, managed the impossible trinity, maintaining monetary independence and exchange rate stability amidst open capital accounts, while navigating a global, higher-for-longer interest rate regime. It further explores the deepening of capital markets, the resilience of non-banking financial companies, NBFCs, and the rapid evolution of India's digital public infrastructure, DPI, in democratizing finance. Section 1. Monetary Developments. The Art of Calibration. The survey describes the monetary landscape of 2025-26 as one defined by vigilance and adaptability. The RBI's policy stance focused on anchoring inflation expectations while ensuring ample liquidity for productive sectors. 1.1 Global Monetary Backdrop. Black the Global Pivot. The chapter contextualizes India's stance against the global backdrop, where major central banks, Fed, ECB, paused rate hikes but maintained restrictive terminal rates to combat sticky service inflation. Black decoupling. A key theme is the decoupling of India's monetary cycle from the West. While advanced economies face the risk of over-tightening, leading to recession, India's domestic demand-driven growth allowed the RBI to maintain a pause on the repo rate for extended periods, focusing instead on liquidity management. 1.2 The policy stance. Withdrawal of accommodation. Black repo rate trajectory. The survey reviews the trajectory of the policy repo rate. After the cumulative hikes of the previous cycle, FY25 largely saw a pause, aiming to keep the real interest rate, repo rate minus inflation, positive. This positive real rate is cited as crucial for incentivizing domestic savings, which fund the investment cycle. Black liquidity management. The chapter analyzes the shift from systemic surplus liquidity to a more balanced/deficit mode. The RBI utilized variable rate repo, VRR, and variable rate reverse repo, VRRR auctions to fine-tune liquidity, ensuring short-term rates remained aligned with the policy anchor. 1.3 Transmission of policy rates. Black lending rates. The transmission of past rate hikes to lending rates, MCLR and EBLR, was nearly complete. Black deposit rates. Crucially, the survey notes a significant catch-up in deposit rates. As credit demand surged, banks aggressively raised term deposit rates to mobilize funds, correcting the asset-liability mismatch risks that had emerged in early FY25. Section 2. The banking sector. A pillar of strength. The core of Chapter 3 is the resounding endorsement of the scheduled commercial banks, SCBs. The banking sector is described as being in its healthiest shape in a decade. 2.1 Asset quality. The cleanup dividend. Black GNPA and NNPA. Gross non-performing assets, GNPA, have declined to a historic low, estimated below 2.8%, while net NPAs are below 1%. This indicates that the legacy stock of bad loans has been almost entirely provided for or written off. Black slippage ratio. Fresh slippages, new bad loans, have moderated significantly, reflecting better underwriting standards and the use of credit bureaus and account aggregators for risk assessment. 2.2 Credit growth. Fueling the growth frontier, Black broad-based expansion. Non-food credit growth remained robust, hovering around 15–16%. Black sectoral deployment. Industry. Credit to large industries saw a revival, signaling the start of the private capex cycle. Sectors like steel, cement, and petrochemicals led the demand. Services, driven by NBFCs and trade commercial real estate. Personal loans. The survey likely includes a note of caution regarding the rapid growth in unsecured retail lending, personal loans, credit cards. It highlights the RBI's preemptive increase in risk weights for these assets as a prudent macroprudential measure to prevent systemic buildup. 2.3 Capital adequacy and resilience, Black CRAR. The capital to risk-weighted assets ratio, CRAR, of SCBs stands comfortably above the regulatory requirement, estimated ~16, 8%. This implies banks have sufficient capital buffers not just to absorb shocks, but to fund the growing credit appetite of a $5 trillion economy. Black PCR. The provision coverage ratio, PCR, remains healthy, above 75%, ensuring that banks' balance sheets are insulated against potential asset value erosion. Section 3. Non-banking financial companies, NBFCs. The survey acknowledges NBFCs as critical for last-mile credit delivery, particularly to MSMEs and unbanked segments. 3.1 Financial health of NBFCs. Black resilience. Despite rising borrowing costs, due to tighter bank funding, NBFCs maintained healthy balance sheets with low delinquency rates. Black scale-based regulation. The chapter reviews the impact of the RBI's scale-based regulation, SBR, framework. It argues that SBR has reduced regulatory arbitrage between banks and large NBFCs, upper layer, enhancing systemic stability. 3.2 Co-lending model. Black synergy. A growing trend highlighted is the co-lending model, CLM. Banks provide the cheap capital, while NBFCs provide the origination and collection reach. This synergy is effectively lowering the cost of credit for priority sectors like agriculture and microenterprises. Section 4. Capital markets, wealth creation and financing. The capital markets are presented not just as a venue for speculation, but as a vital engine for capital formation and wealth distribution. 4.1 Primary market. The IPO boom. Black resource mobilization. The survey details the robust activity in the primary market, initial public offerings. The emergence of new-age tech companies and SMEs listing on bourses indicates a broadening of the issuer base. Black SME exchanges. A specific mention is likely made of the vibrancy in SME platforms, which are allowing smaller companies to access equity capital, reducing their reliance on debt. 4.2 Secondary market and retail participation. Black the SIP culture. The financialization of savings is a key structural shift. Monthly Systematic Investment Plan, SIP, inflows reaching record highs, exceeding 20,000 crore month, act as a shock absorber against foreign portfolio investor, FPI, outflows. Black direct retail investors. The sharp rise in DMAT accounts signifies a deepening equity culture, though the survey advises focus on investor education and awareness. 4.3 Bond markets. Black corporate bonds. While growing, the corporate bond market remains an area requiring further deepening. Black sovereign green bonds. The chapter reviews the issuance of sovereign green bonds, noting that the proceeds are actively funding renewable energy and metro projects, aligning finance with climate goals, Chapter 6 link. Section 5. Insolvency and Bankruptcy Code, IBC. The IBC is reviewed not just as a recovery mechanism, but as a behavior-changing legislation. 5.1 Progress Report. Black resolution versus liquidation. Analysis of cases admitted to the National Company Law Tribunal, NCLT. While liquidation numbers remain high for legacy cases, the value preserved in resolved cases is emphasized. Black behavioral change. The fear of losing control has instilled credit discipline among promoters, reducing the incidence of willful defaults. Black prepacks. The survey advocates for wider adoption of prepackaged insolvency resolution processes, PPIRP, for MSMEs to speed up resolution and reduce costs. Section 6. Digital financial inclusion. This section highlights India's global leadership in fintech and digital payments. 6.1 Unified Payments Interface, UPI, Black global expansion. UPI is no longer just domestic. Its integration with payment systems in other countries, e.g., Singapore, UAE, France, is discussed as a step towards internationalizing the rupee. Black credit on UPI. The introduction of credit lines on UPI is analyzed as a potential game changer for small-ticket consumption credit. 6.2 CBDC. The e-rupee Black pilot progress. An update on the central bank digital currency, $U20B9, pilots in both wholesale and retail segments. The survey views CBDC as the future backbone for programmable money and efficient cross-border settlements. 6.3 Account Aggregator, AA framework. Black data democracy. The AA ecosystem is democratizing credit. By allowing users to share financial data, GSD, bank statements, securely, it enables cash flow-based lending rather than collateral-based lending, significantly helping MSMEs without physical assets. Section 7. Conclusion and way forward. The chapter concludes by synthesizing the financial sector's role in the broader economic strategy. 7.1 Risks and safeguards. Black cybersecurity. As finance digitizes, cyber risks become systemic risks. The need for robust IT governance in banks is paramount. Black global spillovers. The potential for volatility in global bond markets to spill over into domestic yields remains a watchpoint. 7.2 The strategic outlook. Black financing. The Amrit call. The financial sector must shift gears from cleaning up to scaling up. The investment needs for the green transition and infrastructure, estimated at trillions of dollars, cannot be met by banks alone. Deep bond markets and long-term institutional capital, pension insurance funds, are required. Black final verdict. The chapter closes with the assertion that India's financial system is now a source of strategic resilience. It is robust, regulated, and increasingly digitized, ready to power India's ascent to the third-largest economy. A resilient financial sector is the bedrock of a rising economic power. With clean balance sheets and digital rails, India's financial system is uniquely positioned to fund the journey from recovery to the growth frontier. Chapter 4. Prices and Inflation, Guarding the Stability Anchor Theme. Macroeconomic Stability, Supply-Side Management, and Food Security Executive Summary. Chapter 4 of the Economic Survey 2025-26, titled Prices and Inflation, Guarding the Stability Anchor, serves as the vital bridge between the monetary policy framework, Chapter 3, and the real economy. In a year where the global economy struggled with the last mile of disinflation, India demonstrated a unique resilience, successfully aligning its headline inflation trajectory with the Reserve Bank of India's, RBI, tolerance band. The central thesis of this chapter is the decoupling of core and food inflation. While core inflation, non-food, non-fuel, has moderated to historic lows, driven by softening input costs and supply chain normalization, food inflation has remained volatile, acting as the primary source of macroeconomic noise. This volatility is attributed not to excess demand, which monetary policy can fix, but to supply-side shocks and increasingly climate variability. The chapter offers a granular analysis of the Consumer Price Index, CPI, the Wholesale Price Index, WPI, and the convergence between the two. It highlights the government's shift from reactive firefighting measures to proactive supply-side management, dynamic trade policy, buffer stocking as the key determinant in tamming the price dragon. Section 1. The Global Inflation Landscape. The last mile. The chapter situates India's price dynamics within the global context, characterizing FY25 as the year the world grappled with the stickiness of service inflation. 1.1 Global disinflation slows. The survey notes that while the peak inflation of 2022-23 is behind us, the descent to the 2% targets in advanced economies, US, UK, Eurozone, has been slower than anticipated. Black services inflation. Tight labor markets in the West kept wage growth high, sustaining pressure on service prices. Black geopolitics. The fragmentation of energy markets due to conflicts in the Middle East and Eastern Europe kept the geopolitical risk premium on commodities elevated. 1.2 Imported inflation, a fatting threat. A key observation for India is the moderation of imported inflation, with global commodity prices, metals, edible oils correcting from their peaks, and the rupee remaining relatively stable, as noted in Chapter 3. The pass-through of global prices to domestic consumers was muted in 2025-26. This allowed domestic factors to take precedence in determining the inflation trajectory. Section 2. Domestic Retail Inflation, CPI. Trends and drivers. This section provides the core analysis of the Consumer Price Index, CPI, the nominal anchor for the economy. 2.1 Headline inflation. Staying within the band. Black performance. The survey highlights that headline CPI inflation averaged 4.9% in FY25 APRDEC, staying comfortably within the RBI's tolerance band of 4% plus 2%. Black the trajectory. The year saw a U-shaped movement, moderating in the first half. Facing a temporary spike in Q2 due to vegetable prices, and cooling again in Q3. This volatility reinforces the need for constant vigilance. 2.2 The Great Divergence. Core versus food. The defining feature of 2025-26 price dynamics is the sharp divergence between the two major components of the CPI basket. 1. Core inflation, the good news. Excluding food and fuel, core inflation dropped to a multi-year low, hovering around 3.84%. The survey attributes this to input cost moderation, lower prices of raw materials, chemicals, metals for manufacturing firms. Supply chain restoration, the complete normalization of post-pandemic logistics. Monetary transmission, the lagged impact of previous repo rate hikes cooling discretionary demand slightly. 2. Food inflation, the challenge. Food and beverages weight tilde 46% in CPI averaged higher, often exceeding 6-7% in specific months. This component prevented headline inflation from permanently settling at the 4% target. Section 3. Food inflation. The Thali economics. Given its dominance in the Indian consumption basket, the survey dedicates a substantial portion of Chapter 4 to analyzing food prices. 3.1 The vegetable volatility, top crops, black tomato, onion, potato, top. The survey analyzes the recurring spikes in these three staples. FY25 witnessed the cobweb phenomenon, where prices spike due to lower sowing in the previous season, leading to oversowing and a price crash in the next. Black climate shocks. A critical new theme is the climate inflation nexus. Unseasonal rains in key growing states, Maharashtra, Karnataka, during the harvest season disrupted the supply chain of onions and pulses. The survey argues that food inflation is increasingly becoming a function of climate adaptation rather than just agricultural yield. 3.2 Cereals. The buffer stock strategy. Black wheat and rice. Prices remained elevated but controlled. The government's aggressive open market sales scheme, OMS, offloading record quantities of wheat and rice from Food Corporation of India, FCI go-downs, is credited with capping the upside in cereal inflation. Black rice export ban. The continued restrictions on non-basmati rice exports are analyzed as a necessary trade-off to ensure domestic food security over export earnings. 3.3 Pulses. The structural deficit. The chapter identifies pulses, specifically TER/ARHAR, as a structural pain point. Despite rising MSPs, minimum support prices, domestic production lags behind consumption demand. The reliance on imports from Africa and Myanmar makes domestic prices susceptible to global dynamics. 3.4 Edible oils. The success story. In contrast to pulses, edible oil inflation was negative or low for most of the year. The government's policy of low import duties on palm, soy, and sunflower oils facilitated cheap imports, directly benefiting the household budget. Section 4. Wholesale Price Index, WPI. The producer's perspective. The survey analyzes WPI to gauge the pricing power of producers and the pipeline pressures for retail inflation. 4.1 Returning to positive territory after a period of deflation in the previous year. Due to a high base, WPI returned to low positive territory in FY25 approx. 1-2%. Black implication. This mild positive WPI is viewed as healthy for corporate margins. It indicates that producers have some pricing power, which supports nominal GDP growth and corporate profitability, linking back to the corporate tax buoyancy mentioned in Chapter 2. 4.2 WPI-CPI convergence. The chapter notes a convergence between WPI and CPI trends. When WPI is significantly lower than CPI, as seen in early FY25, it implies that input costs are low while retail prices are maintained, leading to margin expansion for companies. As WPI rises, this margin cushion may erode unless efficiency improves. Section 5. Housing and service inflation. Moving beyond goods, the survey touches upon the sticky components of the index. 5.1 Housing rentals. The housing component of CPI, which largely tracks urban rentals, showed a gradual uptick. As employees returned to offices in Tier 1 cities, rental demand surged. However, the weight of housing in the Indian CPI is relatively low compared to developed economies, mooting its impact on the headline number. 5.2 The service sector. Inflation in health, education, and personal care remained sticky but stable. The survey notes that price resetting in the services sector happens annually and is less volatile than goods inflation. Section 6. Policy Toolkit. From Firefighting to Management. Chapter 4 details the evolving strategy of the government and the central bank in managing prices. The approach is described as a multi-pronged strategy. 6.1 Monetary Policy. The demand lever, black the anchor. The RBI's resolute commitment to the 4% target anchored long-term inflation expectations. By not loosening rates prematurely, the central bank ensured that second-round effects, where high food prices lead to high wage demands, did not materialize. 6.2 Fiscal and Trade Policy. The supply lever. The survey argues that in a developing economy, supply management is the first line of defense against inflation. Black Dynamic Trade Policy. The swift alteration of export duties on onions and import duties on pulses oils allowed the government to modulate domestic availability in real time. Black Price Stabilization Fund, PSF. The proactive procurement of buffer stocks for onions and pulses and their release via retail outlets, Burrit Dal, Burrit Atta, is highlighted as a direct consumer intervention that bypassed hoarding by middlemen. Black Fuel Tax Management. The calibrated reduction in LPG prices and the refusal to pass on short-term crude spikes helped insulate households. 6.3 Administrative Measures. Black Stock Limits. The imposition of stock limits on traders for essential commodities prevented speculation during festival seasons. Black Digitization. The use of digital portals to track stock declarations in real time is cited as a governance reform that reduced information asymmetry in agricultural markets. Section 7. The Climate Inflation Nexus, Forward Outlook. A unique addition to the 2025-26 survey is a forward-looking analysis of how climate change is altering inflation modeling. 7.1 Greenflation and Climate Shocks. Black Volatility is the New Normal. The chapter asserts that extreme weather events, heat waves affecting wheat, unseasonal rains affecting vegetables, are no longer transitory shocks but structural risks. Black Adaptation Costs. The transition to climate-resilient agriculture, detailed in Chapter 7, will entail costs. The survey warns that greenflation, rising costs due to the green transition, and climateflation, prices rising due to supply destruction, will keep the floor of food inflation higher than in previous decades. 7.2 Cold chain. As a price stabilizer to counter this, the survey strongly advocates for the expansion of cold storage infrastructure. By increasing the shelf life of perishables, top crops, the economy can smooth out the boom and bust price cycles caused by weather shocks. The Operation Greens scheme is highlighted as a critical anti-inflationary tool. Section 8. Conclusion and way forward. The chapter concludes by summarizing the outlook for prices in FY26 and beyond. 8.1 Outlook for FY26 Black Headline Projection. The survey projects CPI inflation to average 4.5% in FY26, assuming a normal monsoon and no fresh geopolitical flare-ups. Black the glide path. It expects inflation to structurally align with the 4% target by the second half of the fiscal year. 8.2 Strategic Imperatives 1. Data Architecture. The survey calls for updating the CPI basket base year revision to reflect changing consumption patterns, less food, more data services, to ensure inflation measurement remains accurate. 2. Crop diversification. Shifting acreage from water-guzzling crops to pulses and oilseeds is the only long-term solution to the structural deficit in these commodities. 3. The guardrails. The chapter ends with a message of caution. While core inflation is conquered, food inflation remains a sleeping dragon. Strategic resilience requires that the government maintains its supply-side toolkit in a state of constant readiness. Price stability is not just a monetary statistic. It is the silent tax cut for the poor and the foundation of consumer confidence. In FY25, India successfully guarded this stability anchor, proving that prudent supply management is as potent as interest rate hikes. Chapter 5. External Sector, Navigating the Currents of Fragmentation Theme. Export Resilience, Services Boom, and Global Value Chain Integration Executive Summary. Chapter 5 of the Economic Survey 2025-26, titled External Sector, Navigating the Currents of Fragmentation, analyzes India's engagement with the global economy in a year defined by geopolitical flux and trade realignment. The chapter posits that, while the era of hyperglobalization has ceded ground to slowbalization and friendshoring, India has successfully adapted its external strategy to convert these disruptions into opportunities. The central narrative of the chapter is the structural transformation of the balance of payments. While merchandise exports faced headwinds from a slowing global economy, the services sector emerged as the unyielding bulwark, providing a massive surplus that kept the current account deficit, CAD, within comfortable limits, 1.2%, 1.5% of GDP. Furthermore, the chapter highlights India's pivot from passive integration to strategic indispensability, a concept detailed in Chapter 16. By deepening its footprint in global value chains, GVCs, particularly in electronics and high-end engineering, and by aggressively pursuing bilateral free trade agreements, FTAs, India is positioning itself as a credible alternative node in the global supply matrix. Section 1. The Global Trade Landscape, Headwinds and Realignment. The chapter begins by surveying the turbulent waters of global trade in 2025. 1.1 Global Trade Slowdown, Black Volume versus Value. The survey notes that world merchandise trade volume growth remained tepid, below 3%, for the third consecutive year. Inflationary pressures in advanced economies and China's internal demand slump suppressed global appetite for goods. Black geoeconomic fragmentation. The rise of protectionist industrial policies, such as carbon border adjustment mechanisms and subsidy wars in EVs chips, has fragmented the multilateral trading system. The World Trade Organization, WTO, rules are increasingly being bypassed in favor of regional or bloc-based arrangements. 1.2 Supply Chain Reorientation. Black China Plus One. The survey observes that the China Plus One strategy has moved from boardroom discussions to tangible capital flows. Multinational corporations are actively diversifying their sourcing bases, and India is capturing a growing share of this flight to resilience, particularly in mobile manufacturing and specialty chemicals. Section 2. Merchandise Trade, Resilience Amidst Volatility. This section provides a granular analysis of trade in goods. 2.1 Export Performance. Black the aggregate picture. Merchandise exports remained resilient, hovering near the $450 billion mark, despite the recessionary trends in key markets like the Eurozone. Black sectoral bright spots. Electronics, the star performer of FY25. Mobile phone exports surged, validating the success of the production-linked incentive, PLI scheme. The survey highlights that electronics have broken into the top 5 export commodities, signaling a move up the value chain. Engineering goods remained robust, driven by demand from the U.S. and Middle East infrastructure projects. Drugs and pharmaceuticals continued to grow, reinforcing India's status as the pharmacy of the world, with a notable shift towards biosimilars and complex generics. Black laggards, traditional sectors like gems and jewelry and textiles, faced pressure due to muted discretionary spending in the West and intense competition from Vietnam and Bangladesh. 2.2 Import dynamics. Black energy dependence. Petroleum and crude products remain the largest import item. However, the survey notes a significant increase in the import of discounted crude from diversified sources, including Russia, which helped manage the import bill despite global volatility. Black intermediates versus consumption. A positive trend identified is the rising share of intermediate and capital goods in the import basket, e.g., semiconductor components, machinery. This indicates that imports are fueling domestic manufacturing, make in India, rather than just consumption. 2.3 The trade deficit. The merchandise trade deficit widened slightly, but remained manageable. The survey argues that, for a developing economy investing in infrastructure, a trade deficit is not inherently bad if it is financed by stable capital flows and driven by capital goods imports. Section 3. Services trade. The invisible shield. If manufacturing is the engine, the services sector is described as the shield, protecting India's external balance. 3.1 The services surplus. Black record performance. Services exports continued their blistering run, crossing $360 billion. The net services surplus effectively financed over 60% of the merchandise trade deficit. Black compositional shift. Beyond IT. While IT BPM remains the bedrock, the survey highlights the rapid growth of business services, management consulting, R&D, engineering design. Global Capability Centers, GCCs. A key theme is the explosion of GCCs in India. Multinational giants are no longer just outsourcing back-office work, but are setting up transformation hubs in India. This has moved service exports up the value ladder. 3.2 Travel and transport. Black recovery. The travel and tourism sector saw a full recovery to pre-pandemic levels, boosting service export earnings. Black logistics. Transport services exports also rose, reflecting the growing capacity of Indian shipping and logistics firms. Section 4. Balance of payments, BOPI, and current account. This section synthesizes the trade data to assess the overall health of India's external accounts. 4.1 Current account deficit. CAD. Black the comfort zone. The CAD for FY25 is estimated to be largely manageable, ranging between 1.2% to 1.5% of GDP. Black remittances. India retained its position as the top recipient of global remittances, surpassing $130 billion. The survey notes a structural shift in remittances, moving from blue-collar flows from the Gulf to white-collar flows from North America and Europe, making them more stable and high-value. 4.2 Capital account dynamics. Black foreign direct investment, FDI, gross inflows. While global FDI flows slowed, India remained a preferred destination. Sectoral shift. FDI is increasingly flowing into non-traditional sectors like renewable energy, digital infrastructure, and data centers, aligning with the country's long-term investment cycles. Black foreign portfolio investment, FPI. Volatility. FPI flows were volatile, reacting to the higher for longer interest rates in the U.S. However, the inclusion of Indian government bonds in major global indices, like JP Morgan/Bloomberg, provided a passive flow cushion, bringing in stable, long-term debt capital. 4.3 Overall balance. Black surplus. The BOPI is estimated to remain in surplus, adding to the foreign exchange reserves. This surplus is a testament to the absorption capacity of the Indian economy and its attractiveness to global capital. Section 5. External debt and vulnerability indicators. The survey conducts a stress test of India's external position to counter any narratives of vulnerability. 5.1 Forex reserves. Black the war chest. Foreign exchange reserves stood at a robust level, approx. $640.650 billion. Black import cover. The reserves provide an import cover of over 10-11 months, far exceeding the conventional benchmark of 3 months. This buffer is critical for strategic resilience, allowing the RBI to intervene to smooth out volatility without fear of depletion. 5.2 External debt sustainability, black debt to GDP. India's external debt to GDP ratio remains one of the lowest among major emerging market economies, below 20%. Black sovereign ceiling. The share of sovereign government debt in total external debt is low, 5%, reducing the risk of a sovereign debt crisis. Black short-term debt. The ratio of short-term debt to reserves is well within safe limits, indicating no immediate rollover risks. Section 6. Strategic initiatives, intelligent indigenization. Linking back to Chapter 16, this section details the policy levers used to enhance external engagement. 6.1 Free Trade Agreements, FTAs, Black New Approach. The survey analyzes the shift in India's FTA strategy from defensive to strategic. Black Recent Pacts. It likely discusses the utilization of the India-Australia ECTA and the India-UAE SEPA, showing early gains in labor-intensive exports. Black Ongoing Negotiations. The focus is on fair and balanced deals with the UK and EU, aiming to gain market access for Indian professionals, Mode 4 services, and textiles leather goods. 6.2 Logistics and Trade Facilitation, Black NLP and Gati Shakti. The National Logistics Policy, NLP, and PM Gati Shakti are credited with reducing dwell times at ports. The survey notes that India's turnaround time at major ports is now competitive with global best practices, reducing the transaction cost for exporters. 6.3 Internationalization of the Rupee Black Settlement Mechanism. The chapter reviews the progress of the mechanism, allowing international trade settlement in INR. While nascent, the operationalization of Vostro accounts with several partner countries is seen as a long-term structural reform to reduce dollar dependence. Section 7. Conclusion and Outlook. The chapter concludes with a forward-looking assessment of the external sector. 7.1 Outlook for FY26 Black Export Rebound. The survey projects a rebound in merchandise exports in FY26, contingent on a soft landing in the U.S. economy and a recovery in global trade volumes. Black services dominance. Services exports are expected to continue their double-digit growth, driven by AI-led transformation in GCCs. 7.2 The strategic pivot. The survey reiterates that India's external sector is undergoing a fundamental transformation. It is no longer just about exporting surplus production, but about becoming an integral part of the global production process. Black integration. The future lies in deep integration into global value chains. Black diversification, reducing market concentration, dependency on US-EU, by expanding into Latin America, Africa, and Central Asia. 7.3 Final thought. In a fragmented world, resilience does not come from isolation but from diversified integration. India's external sector, powered by a high-tech services engine and a modernizing manufacturing base, has evolved from a vulnerability to a source of strategic strength. Chapter 6. Climate Change and Energy Transition, dealing with the dilemma theme, Energy Security, Green Transition, and Climate Finance Executive Summary. Chapter 6 of the Economic Survey 2025-26, titled Climate Change and Energy Transition, dealing with the dilemma, confronts the most defining structural challenge of the decade: how to sustain high growth, pushing the frontier, while adhering to a sustainable, low-carbon pathway. The central narrative of this chapter is energy security as the foundation of the transition. The survey argues that for a developing economy like India, the energy transition cannot be a leap of faith, but must be a calculated, orderly progression. It rejects the Western binary of green versus brown energy, advocating instead for a multi-fuel strategy where fossil fuels provide the baseload stability required for industrialization, while renewables drive the incremental growth in capacity. The chapter provides a progress report on India's Panchamrit goals, highlighting the rapid expansion of non-fossil fuel capacity. However, it also strikes a combative note on the issue of climate finance, criticizing the developed world for failing to meet financial obligations and for erecting green protectionist barriers, like carbon border taxes, that threaten the trade prospects of the Global South. Section 1. The Global Climate Context, Ambition versus Reality. The chapter opens by situating India's efforts within the global discourse, characterizing the international climate landscape as one of high ambition but low implementation. 1.1. The Widening Gap, Black Emission Gap. The survey notes that despite pledges at recent COPs, global emissions have not peaked in line with the 1.5 degrees C pathway. Black Finance Gap. A recurring theme is the broken promise of climate finance. The $100 billion annual target, set in 2009, is described as minuscule compared to the estimated need of trillions. The survey highlights that flows to developing countries are largely in the form of debt loans rather than grants, exacerbating debt vulnerabilities. 1.2. The Rise of Green Protectionism. Black CBAM and New Trade Barriers. The survey offers a sharp critique of mechanisms like the EU's Carbon Border Adjustment Mechanism, CBAM. It categorizes these as trade weapons disguised as climate action, which unfairly penalize developing nations that are still building their industrial base. Black Fragmented Markets. The race for critical minerals, lithium, cobalt, nickel, has led to a new form of geopolitical competition, complicating the global supply chain for green technologies. Section 2. India's Climate Performance. Walking the talk against this backdrop, the survey presents India as a responsible power that is over-delivering on its commitments. 2.1. Progress on NDCs, Nationally Determined Contributions. Black Emission Intensity. The chapter highlights that India has already achieved its target of reducing the emission intensity of its GDP well ahead of the 2030 deadline. The decoupling of growth from emissions is cited as a major structural achievement. Black non-fossil capacity. The share of non-fossil fuel sources in installed electricity capacity has crossed the 45% mark. The explosive growth in solar and wind capacity is detailed as evidence of the green push. 2.2. The Panchamrit Status Report. The survey likely provides a scorecard on the 5 commitments made by the Prime Minister. 1. Net zero by 2070, on track, with sectoral roadmaps being developed. 2. 500 GW non-fossil capacity. The pace of installation has accelerated, though land acquisition and transmission infrastructure, green energy corridors remain bottlenecks. 3. Renewable energy share, rising steadily, supported by the decline in solar tariff rates. 4. Carbon reduction. The absolute reduction of 1 billion tons is being pursued through energy efficiency, PAT scheme, and afforestation. 5. Intensity reduction. The economy is becoming more energy efficient per unit of output. Section 3. Energy security, the just transition. This is the strategic core of the chapter. It articulates the doctrine of intelligent indigenization applied to energy. 3.1. The Role of Coal. Black the base load reality. The survey is unapologetic about the continued reliance on coal. It argues that until battery storage becomes cost competitive, coal is the only source of reliable baseload power, 24x7, required for manufacturing. Black responsible use. The focus is on clean coal technologies, coal gasification, carbon capture, and improving the efficiency of thermal power plants, rather than an abrupt phase-out which would jeopardize energy security. 3.2. Oil and gas. The bridge fuel. Black gas economy. Natural gas is positioned as the bridge fuel for the transition. The expansion of the city gas distribution, CGD, network and LNG terminals is crucial for decarbonizing the industrial and transport sectors. Black strategic petroleum reserves. In line with strategic resilience, the need to expand strategic oil reserves to buffer against geopolitical shocks is emphasized. 3.3. Renewable energy, RE, dynamics. Black solar dominance. Solar power continues to lead the RE pack. The survey highlights the success of the PLI, production-linked incentive scheme for solar PV modules, aiming to break dependency on Chinese imports. Black wind and hybrid, a renewed focus on repowering old wind farms and promoting wind-solar hybrid projects to improve the plant load factor, PLF. Section 4. Green industrialization. The new growth driver. The survey identifies the green transition not just as a compliance burden, but as a massive economic opportunity, a new engine for pushing the growth frontier. 4.1. The National Green Hydrogen Mission. Black ambition. India aims to become a global hub for the production and export of green hydrogen and green ammonia. Black implementation. The chapter reviews the initial allocation of incentives for electrolyzer manufacturing. It identifies green steel and green shipping as the primary demand centers that will drive the hydrogen economy. 4.2. Electric mobility, e-mobility, Black 2-3-wheeler revolution. The survey notes that the EV transition is being led by the two-wheeler and three-wheeler segments, last-mile connectivity. The FAME-II and PM eDrive schemes have successfully seeded the market. Black public transport. The push for e-buses in state transport undertakings is highlighted as a high-impact intervention for urban pollution. Black battery ecosystem. The critical importance of the PLI for advanced chemistry cell, ACC, storage is discussed. Building domestic battery capacity is termed essential for auto sector indigenization. 4.3. Energy efficiency. Black PAT scheme. The Perform, Achieve, and Trade PAT scheme for energy-intensive industries is credited with saving millions of tons of oil equivalent. Black UJALA. The LED revolution is cited as a global case study in demand-side management. Section 5. Financing the transition. The trillion-dollar question. The chapter dedicates significant space to the money problem. 5.1. The cost of capital. Black risk premium. The survey argues that the cost of capital for green projects in India is artificially high due to global credit rating biases. Lowering this cost is essential for the viability of RE projects. Black blended finance. It calls for blended finance structures where concessional public capital de-risks private investment. 5.2. Sovereign green bonds. Black framework. The chapter reviews the issuance of sovereign green bonds. It analyzes the greenium, the lower yield interest rate benefit, achieved, and details how the proceeds were utilized, e.g., in public sector wind projects or metro rails. Black-green taxonomy. A roadmap for a clear green taxonomy, defining what counts as green to prevent greenwashing and guide private capital, is likely discussed. 5.3. Carbon markets. Black CCTS. The establishment of the Carbon Credit Trading Scheme, CCTS, is a major structural reform. The survey explains how creating a domestic carbon market will incentivize industries to reduce emissions and generate tradable credits, eventually linking with global markets. Section 6. Mission LEFE. The behavioral pivot. Moving beyond technology and finance, the survey emphasizes the role of lifestyle changes. 6.1. Pro-planet people. Black demand-side mitigation. The Mission LEFE, Lifestyle for Environment, initiative is analyzed as a demand-side strategy. The survey cites studies showing that circular economy practices and conscious consumption can reduce global emissions significantly. Black circular economy, transitioning from take, make, dispose to reduce, reuse, recycle. Policies regarding e-waste, vehicle scrappage, and plastic waste management are reviewed under this umbrella. Section 7. Adaptation and resilience. Recognizing that climate change is already here, as noted in the Chapter 4 analysis regarding inflation. The survey stresses adaptation. 7.1. Climate-resilient agriculture. Black new varieties. The release of heat-resistant wheat and flood-tolerant rice varieties by ICAR is highlighted as a critical step for food security. Black water security. The Amrit Sarovar mission, rejuvenating water bodies, and per drop more crop initiatives are discussed as adaptation measures against erratic monsoons. 7.2. Disaster resilience. Black CDRI. India's leadership in the Coalition for Disaster Resilient Infrastructure, CDRI, is showcased. The focus is on building infrastructure, roads, power grids, telecom, that can withstand extreme weather events, minimizing economic disruption. Section 8. Conclusion and way forward. The chapter concludes with a vision of strategic autonomy in energy. 8.1. The trilemma. The survey frames the path ahead as balancing the energy trilemma. 1. Availability, access to power for all. 2. Affordability, keeping costs low for the poor and for industry competitiveness. 3. Sustainability, reducing the carbon footprint. 8.2. Outlook. Black no, one size fits all. The survey firmly rejects imported dogmas on decarbonization. It asserts that India's path will be unique, characterized by a longer reliance on coal but a faster acceleration in renewables. Black strategic opportunity. Finally, it reframes the challenge. The energy transition is not just about saving the planet. It is about saving the balance of payments, reducing oil imports, and creating new high-tech industries. 8.3. Closing thought. India's energy transition is an exercise in strategic realism. We will not compromise our developmental goals for external validation, but we will lead the world in demonstrating that a low-carbon growth model is not just possible, but profitable. The path to green growth is paved with Indian innovation and pragmatic policy. Chapter 7. Agriculture and Food Management, from Food Security to Strategic Resilience theme. Climate Adaptation, Allied Sector Growth, and Digital Agriculture Executive Summary. Chapter 7 of the Economic Survey 2025-26, titled Agriculture and Food Management, from Food Security to Strategic Resilience, analyzes the performance of the sector that remains the largest employer in the Indian economy. In a year defined by global supply chain fragmentations and climateflation, inflation driven by weather shocks, the Indian agricultural sector demonstrated remarkable fortitude. The central thesis of this chapter is the structural pivot. The survey argues that Indian agriculture is pivoting from a cereal-centric model focused on calorie sufficiency to a diversified, high-value model focused on nutritional security and income maximization. While crop output remains vital, the drivers of growth have decisively shifted to the allied sectors: livestock, dairying, and fisheries, which are growing at 2-3 times the rate of the crop sector. Furthermore, the chapter identifies climate change as the single biggest risk to the growth frontier of agriculture. It outlines a comprehensive strategy of intelligent indigenization in seeds and fertilizers, coupled with the deployment of digital public infrastructure, AgriStack, to future-proof the farm economy against the vagaries of nature. Section 1. Overview of performance. The steady anchor. The chapter begins by establishing agriculture's role as the reliable anchor of the Indian economy, particularly amidst global volatility. 1.1. Gross value added. GVA trends black growth trajectory. The sector is estimated to have grown by 3.8% in FY25, real GVA. This is higher than the long-term trend rate of 3.5%, reflecting robust performance in both the Kharif and Rabi seasons despite delayed monsoon onset in some regions. Black share in economy. While agriculture's share in overall GVA continues to naturally decline, to approx. 17-18%, as the industrial and service sectors accelerate, its share in employment remains disproportionately high, 44%. The survey frames this not just as a productivity challenge, but as a buffer that absorbs labor shocks. 1.2. Production estimates. Black food grains. Total food grain production touched a new record estimate of 335 million tons, MT. The survey credits this to scientific crop management and higher minimum support prices, MSP, incentivizing acreage. Black horticulture. For the third consecutive year, horticulture production, fruits and vegetables, outpaced food grain production, signaling a shift in consumption patterns and farmer preferences toward higher value crops. 1.3. Gross capital formation. GCF. Black investment trends. A critical insight is the uptick in private investment in agriculture. While public investment, irrigation canals, remains stable, private investment is rising, driven by mechanization and post-harvest infrastructure. The Agriculture Infrastructure Fund, AIF, is cited as a catalyst for this crowding in of private capital. Section 2. Food Security and Inflation Management. This section connects the farm sector to the inflation themes discussed in Chapter 4, focusing on the government's role in managing the food trilemma: availability, affordability, and accessibility. 2.1. The procurement apparatus Black MSP operations. The survey details the record procurement of wheat and paddy. It argues that the MSP regime has successfully insulated farmers from market volatility. Black Decentralized Procurement, DCP. A key structural reform highlighted is the success of DCP. By empowering states to procure and distribute locally, the system has reduced transportation costs and transit losses, making the food subsidy bill more efficient. 2.2. Buffer Stock Management, Black Strategic Reserves. The chapter notes that stocks of wheat and rice in the central pool remained comfortably above the buffer norms throughout the year. This strategic reserve allowed the government to intervene in the open market, OMSS, to cool down cereal prices when they threatened to spike. Black Pulse Buffer. The creation of a dynamic buffer for pulses, tur, ured, masser, is highlighted as a strategic necessity to counter imported inflation in protein sources. 2.3. PMGKAY. The Safety Net Black Social Stability. The continuation of the Pradhan Mantri Garib Kalyan Anna Yojana, PMGK, providing free grains to 800 million citizens, is analyzed not just as a welfare scheme but as a macroeconomic stabilizer. By protecting the bottom of the pyramid from food inflation, it sustained rural demand for non-food items, FMCG, thereby supporting the broader consumption cycle discussed in Chapter 1. Section 3. The Allied Sectors. The new engines of growth. The survey asserts that the future of Indian agriculture lies outside the farm. The allied sectors are presented as the primary vehicle for doubling farmers' income. 3.1. Livestock and dairy. Black the growth leader. The livestock sector grew at a CAGR of nearly 7.5%, significantly outperforming the crop sector. Black dairying. India remains the world's largest milk producer. The survey highlights the success of the cooperative model and the rising penetration of the organized private sector in processing. Black disease control. The nationwide vaccination drive against foot and mouth disease, FMD, and brucellosis is cited as a critical sanitary intervention that has reduced yield losses and opened potential export markets. 3.2. Fisheries. The Blue Revolution Black Sunrise sector. Fisheries recorded double-digit growth. The Pradhan Mantri Matsya Sampada Yojana, PMMSY, is credited with modernizing fishing harbors and promoting inland aquaculture. Black export potential. Marine products remain one of India's largest agricultural exports. The shift towards shrimp farming in saline wastelands, especially in northern states like Haryana, Punjab, is noted as an innovative land use strategy. 3.3. Poultry and egg. Black resilience. Despite sporadic bird flu outbreaks, the poultry sector showed resilience, driven by rising domestic protein consumption and the formalization of the supply chain. Maize to meat value chain. Section 4. Inputs and resource use efficiency to push the growth frontier. The sector must produce more with less. This section analyzes the efficiency of inputs. 4.1. Fertilizers. The nano-revolution. Black indigenization. The chapter focuses on the strategic shift from imported bulk fertilizers, urea DAP, to indigenous nano-urea and nano-DAP. Black fiscal impact. The adoption of liquid nano-fertilizers is viewed as a dual win. It reduces the massive fertilizer subsidy bill, fiscal consolidation, and prevents soil degradation caused by the imbalance in NPK ratios. Black PMPRANAM. The scheme to incentivize states to reduce chemical fertilizer usage is analyzed, showing early signs of behavioral change among farmers. 4.2. Water. Per drop more crop. Black microirrigation. The expansion of drip and sprinkler irrigation under PM Krishi Sinchi Yojana is detailed. The survey notes that water use efficiency is no longer optional but existential, given the depleting groundwater tables in the Northwest. Black water budgeting. Community-led water budgeting, Atal Bujal Yojana, is highlighted as a model for sustainable aquifer management. 4.3. Mechanization. Black custom hearing centers, CHCs. The Uberization of farm machinery through CHCs has made expensive technology, harvesters, balers accessible to small and marginal farmers, mitigating the labor shortage crisis in rural areas. Section 5. Climate Change and Adaptation, building on Chapter 6. This section specifically addresses the climate-agriculture nexus. 5.1. The climateflation risk. The survey identifies extreme weather, heat waves during the wheat terminal growth stage and unseasonal rains during harvest, as the new normal. It argues that future inflation targeting, Chapter 4, will depend on the success of agricultural adaptation. 5.2. Climate-smart agriculture, CSA, Black resilient seeds. The development and distribution of nearly 2,000 climate-resilient crop varieties, heat-tolerant wheat, drought-tolerant millets chickpea, by ICAR is showcased as intelligent indigenization of science. Black crop diversification. The push to shift acreage from water-guzzling paddy to millets, Sri Anna, and oilseeds in water-stressed districts is framed as a strategic imperative. The survey notes that millets are not just superfoods, but climate-compliant crops. 5.3. Natural farming. Black Bharatiya Prakritik Krishi Paddhati. The scaling up of natural farming along the Ganga corridor is analyzed. While yield stabilization takes time, the reduction in input costs, zero budget, and the premium price for chemical-free produce are improving net farm incomes. Section 6. Agricultural marketing and value addition. The survey moves from production to marketability. 6.1. ENOM. One Nation, One Market. Black integration. The Electronic National Agriculture Market, ENOM, has integrated over 1,400 mandis. The survey highlights the rise in inter-mandi and interstate trade on the platform, signaling the breaking down of market fragmentation. Black price discovery. Digital assays and quality testing are improving transparency, ensuring farmers get prices commensurate with quality. 6.2. Farmer-producer organizations, FPOs. Black collectivization. The formation of 10,000 FPOs is termed a structural reform. By aggregating smallholders, FPOs are gaining bargaining power in both input purchase and output sales. The survey notes successful case studies where FPOs have directly linked with retail giants and exporters. 6.3. Food processing. The PLI effect. Black value addition. The production-linked incentive, PLI scheme for the food processing industry is creating champions in the ready-to-eat, RTE, and processed fruits vegetables segments. Black reducing wastage. The expansion of cold chain logistics is reducing post-harvest losses, effectively increasing the net supply without increasing production. Section 7. Digital Public Infrastructure, DPI. In agriculture, the chapter dedicates a section to the modernization of the farm stack. 7.1. AgriStack. Black Farmer Registry. The creation of unique farmer IDs and the digitization of land records are laying the foundation for precision policy. Black use cases. The survey envisions a future where credit, insurance, and benefits are delivered seamlessly via the AgriStack, similar to the UPI revolution in payments. 7.2. Technology in action. Black Kisan drones. The usage of drones for nutrient spraying and crop assessment is scaling up. The survey frames this as a productivity leap, reducing time and health hazards for farm labor. Black AI and advisories. Personalized advisories sent to farmers' mobile phones, based on hyperlocal weather data, are helping reduce crop failure risks. Section 8. Trade and global engagement, linking to Chapter 5, External sector. This section reviews agricultural trade. 8.1. Export performance. Black surplus sector. Agriculture remains a net exporter. The export basket is diversifying from rice and buffalo meat to processed items, dairy, and marine products. Black SBS measures. The survey notes the increasing use of sanitary and phytosanitary, SBS, barriers by developed nations, e.g., pesticide residue limits. It calls for a robust domestic testing infrastructure to meet these global standards. Quality is the new tariff. 8.2. Import strategy. Edible oils and pulses. Black strategic indigenization. The National Mission on Edible Oils, oil palm, NMEOAP, is analyzed as a critical import substitution strategy. The survey argues that reducing the $20 billion edible oil import bill is vital for the current account deficit. Black diversification. Until self-reliance is achieved, the survey advocates for diversifying import sources, e.g., sourcing pulses from Brazil, Argentina, alongside Myanmar, Africa, to manage geopolitical risks. Section 9. Conclusion and way forward. The chapter concludes with a vision for the Amrit Kaal of Indian agriculture. 9.1. The roadmap. Black from production to income. The policy focus has decisively shifted from maximizing tons, output, to maximizing rupees, income. Black from chemistry to biology. The shift from chemical inputs to biological natural inputs is inevitable for long-term soil sustainability. Black from farms to factories. The integration of agriculture with the food processing industry is the key to managing rural surplus labor. 9.2. Strategic resilience. The survey asserts that a robust agricultural sector is the bedrock of India's strategic resilience. By securing food and nutrition, it frees up policy space to focus on industrial and technological advancement. Indian agriculture is not a relic of the past, but a powerhouse of the future. By embracing technology, diversification, and climate adaptation, the Indian farmer is not just feeding the nation, but is poised to feed the world. The transition from food security to nutritional security marks the maturity of the Indian